Deputy Finance Minister Mondli Gungubele said yesterday that the national carrier, South African Airways, will need at least 20 billion rand in order to break even in 3 years' time. This after the airline posted a loss of 5.6 billion rand in the 2016-2017 financial year, with another 7 billion in losses projected in the next 2 years. So the question is the airline fixable, and will yet another turnaround strategy rescue it from ruin? We're joined in the studio by CEO Vuyani Jarana. Good evening to you, and thank you for talking to us. I mean, those figures that were announced in Parliament, we're talking about billions casually, but it is in fact a lot of money.
No, it is. It is a lot of money. I think South Africans and the shareholder would realize that the airline business is a capital-intensive business and it's a very low-margin business. So those numbers are not out of kilt from an investment point of view in terms of global airlines. What's important is that the reinvestment in successful airlines comes out of returned earnings. In the case of SAA, it's been making losses, therefore there are capital calls that the shareholder needs to come forward with.
So many people would say, isn't it time to throw in the towel? I mean, how many more billions must taxpayers keep forking out to save this airline?
So I think South Africans will realize that SAA has a very material role that it plays in the economy in terms of the travel market in the continent internationally. However, that role needs to be fulfilled in a very profitable way. And I don't think there are easy answers, because, I mean, even if you were to take a very different decision, the cost of taking a different decision than a strategic turnaround are much more higher than the ask we're putting on the table for the strategic turnaround approach.
Well, people would say since 2011, 20 billion rand has been injected into the airline. Not a single year has it shown profit, and yet more billions are still required from the fiscus. So even if you talk about the other option costing more money, well, that's exactly what we're doing now.
Look, Vuyani, one of the key things is that South Africans will realize most of what government has done is to raise guarantees and actually enabling SAA to go and raise debt. Now, there is an optimum debt capacity for any business, and in that case, in the case of SAA has been having a debt burden. It doesn't mean, though, that if it's debt, you should not execute strategy appropriately. But there's a fine line between overburdening the company and actually gearing it correctly. I think SAA is overgeared.
Look, I have some sympathy with you. Obviously, you've just come into this picture, but I sit here and I think I remember having interviews with, going back to Kaya Ngula's time 10 years ago, and he was talking about turnaround strategies. He was talking about recapitalization. That was 10 years ago. We're back here. It feels like Groundhog Day.
What's important is consistency in leadership. SAA has had inconsistency in leadership instability. So a good business has got executive that stay longer, bring in skills, and got a shareholder who has a very, very clear view of what they want to do with the business. I think what you can see is leadership instability for many years.
The bottom line is that many people will say that the shareholder appears to have this bag of money that just simply doesn't run out. I mean, if we're looking at what the Deputy Finance Minister said to Parliament, 9.2 billion rand in debt that comes due in March next year. You need a further 12 billion rand over the next 3 years without buying a single aircraft.
Well, this is a cost of doing business. This is a cost of doing business.
This is a vanity project, people would say, though. I mean, I understand from your point of view in trying to save it, but what benefit is this to the taxpayer?
No, absolutely. I think the big part of it is that government has already indicated to South Africans that there is considering a mixed model of ownership, which is beginning to say private sector investment in SAA to bring a lot more capacity to do transformation, to actually make sure you've got operating leverage, but also to get investment from private sector to come invest alongside government. And I think government has made that call now.
Well, some in the private sector, certainly your critics, are saying privatization and finding an equity investor to inject cash would also be a pipe dream. They're saying that there's nothing worth investing in now left at SAA.
So we've always maintained that it's going to take us cleaning up SAA, transforming it into a better shape, getting to the break-even point to be able to make SAA attractive. I must also say, though, that in airline, there's other assets which are soft asset, landing slots across the globe. So even though the main part of the business may not be in good shape today, but SAA has got assets in terms of landing slot globally, so that could be an opportunity for equity investor to see see that attractive in SAA.
But you've got basic problems of just record keeping. You don't even know what's being stolen as we sit here.
This is the reason why some of us have signed up to be there. That's why we're recruiting key executives to come into SAA and work with the people of SAA to transform that.
Basic thing about your inventory?
Well, the inventory management system, we have had problems with in terms of the SAA technical, for example, between SAP and Amos, implementing new inventory system and doing stock audits, and all those things are being fixed today. We're focusing on them to make sure that they are done right. We must remember that SAA has had acting leadership for a long period of time in different roles, not only in the top level, across the organization. So lack of leadership stability, consistency in execution, you get this type of results. So this is what we have to fix.
Look, it's a difficult one because even the Auditor General has said without this continued government funding, he doubts that there's even a case for business rescue here. Because without government funding, you couldn't really guarantee that you could be a going concern. And all of these issues are going to keep being a headache.
Yeah, they will. And that's why it's important that the shareholder understands that if you do not put capital into the business, all you do is raise guarantees. There is a point where you get to the situation that we're in. The 9.2 billion rand is a billion rand of debt that has 9.2 billion rand of debt that has been accumulated over years. Now, to get to a going concern status, there is a need to inject capital into the business or extend those loans to a longer period of time so that we're able to operate. So these are the things that the board is seized with, together with the shareholder. A joint oversight committee has been formed between Treasury and the SAA board, looking exactly at the optimum capital structure of SAA and how do we fund it towards the break-even point.
Well, you've stepped into the fire, that's for sure. We wish you luck in terms of what you do and what you implement. Let's hope that 10 years from now, you and I, or whoever replaces you at some point, will not be having the same conversations. That's the CEO of South African Airways, Mr. Vuyani Jarana.
If you ask this Irish master whiskey distiller why sometimes